Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining me. And it's on a day when a lot of people might be a bit spooked about the stock market itself over the last couple of days. And when I look at the threats of markets selling off, I always think about what I call my fearful test. A number of factors I look at. For example, the first one is history. And history tells me that when interest rates are on the way down, stock markets are on the way up. So that's one reason why I'm not fearful about what's going on. Also, history also tells me August and September is often really bad for the US stock market, but the December quarter is terrific. So I'm expecting when interest rates are cut in September, that will help stocks. And when the US election is out of the way, that will also help stocks. Another reason for me not being fearful. But the economy also, the US economy is growing at 2.8%. That's the last reading we've got. Sure, there's some talk about potentially a recession, but really it's based on 1 month's data. And generally speaking, there's been a feeling that the US economy will actually have a soft landing. And there hasn't been enough evidence to knock that a projection out of the park. I think a soft landing is still a possibility. And if it's a recession, it'd be a really shallow one. As I say, 2.8% growth. This is a pretty strong economy, and there's not enough signs there that the economy is actually collapsing. In terms of valuations of stocks, they're pretty high. S&P 500 at 34. History says it should be 20. But remember, 7 big stocks, the Magnificent Seven, they've really pushed the S&P 500 valuation up. If you take them out, the S&P 500 is a lot lower, and therefore I think there's a lot of upside for all the other companies in the S&P 500 that really haven't done well like the Magnificent Seven have over the last 2 or 3 years. Then we get the profits, and 75% of US companies have actually reported profits, and 79% of them have actually beaten earnings expectations. So companies are doing pretty well. Finally, geopolitical concerns, they are a worry, but the markets have been going up with the Ukraine war. They've been going up with the problems in the Middle East. I just think that geopolitical concerns tend to be more short-term issues, not long-term issues. So putting it all together, you can see there's plenty of reasons for not being fearful. And so in many ways, as prices fall over the next couple of weeks, and I think they will, it might be a good time to be greedy. Okay, let's have a look at my guests tonight. I've got Adam Dawes of Shaw & Partners coming on the program to look at a number of interesting stocks and see whether he's actually worried about the sell-off right now. And then Michael Gable goes and looks at the charts for these stocks: BHP, Fortescue, Santos, Pilbara, Life 360, Ordinate, and finally ResMed. That's the show. Let's kick off now with Shaw & Partners, Adam Dawes. Well, joining us now is Adam Dawes of Shaw & Partners. Thanks for joining us, mate.
It's great to be here, Peter. Absolutely great to be here.
Okay, so it's good to see that you're nice and cheery when some people out there would be worried about what's going on in the market. How worried do you think they should be?
Oh, look, yeah, this is normal market reactions, and we've been here before. I think if you look back through the ASX 200, I think we're back to sort of July numbers. So, you know, we had a good run. It punched through the 8,000. We're now having consolidation back at 7,700. This is normally what markets do, and we are going to see more volatility coming into August with reporting season, as well as then, you know, there's lots of talk in the US about interest rate cuts. So, you know, that's potentially helping the market, but that does show that the US market potentially is in a little bit more of a tender relationship, tender hooks, and just needs to be worked through. So market's readjusting to that.
Yeah, funny enough, tender is TNDER, but tenterhooks is TNTER hooks. So
right.
But I'm not expecting a stockbroker like you to understand the English language, but good try anyway, mate. But
Thank you. I was at loss for words and you didn't help me. So anyway.
I think the bottom line, what you're saying is it's historical that you see volatility coming out of the in August and September, and also ahead of a US election. So all this has really been expected. I don't know what you've been telling your stockbroking clients, but I know my financial planning clients who've had a fantastic year, gains of anywhere between 13 to 20% for those risk takers out there, younger clients. But
Mm.
I said I expected a sell-off around this time. And I don't think it'd be big. I guess it could be a correction because America tends to have one correction a year, and they haven't had one yet. So it's a possibility. But I can feel from your language, despite the fact there's problems with your tender hooks and tender, that this is what you expected as well. And you do also think another leg up is going to happen.
Yeah, I do definitely think that leg up is going to happen. There's no doubt about that. I just think that overall, our market had run really hard. Commonwealth Bank at $138. You've got all these big quality businesses just, and moving higher. So it's fantastic while it happens. And then clients are just going, well, hang on, the last 2 days, 3 days, everything sort of started to unravel a little bit. And I think you're right. You've got to remind clients of that yearly number. That's where the actual, really, the rubber does hit the road. It's not about those short-term movements. It's about those medium to long-term movements. And in that case, it has been higher.
Yeah. And really, the only one of your clients who could be whinging one that bought CBA at 132 and it went to 137 and they didn't get out. Anyone who, most of your clients probably got in 100 or 110 and have made money they didn't really deserve because it's a silly price. But anyway, that's another issue again. Let's not pick on your clients. All right, let's go to there's some stocks I wanted you to have a look at because we like BHP at these levels. But what are you guys saying?
Yeah, so BHP, obviously, first of all, the dividend is going to be reduced. So I think as long as the people in the market understand that, and you never buy a resource company for dividends anyway, so that's the first thing. The second thing is I think iron ore sitting around that $99, $100 mark, and has been for a while now. That's going to put a little bit of pressure on BHP as far as the iron ore price and how much they're going to get out of it. Remember, it still costs them around about $21 to $23, I think, a ton to create a ton of iron ore, and that's including the dividend. So there's still a lot of profitability there. I like BHP down here at that sort of 41, 42 level because if you pulled up a 10-year chart of BHP, it consistently gets down here. Sometimes it has gone to $38, so that there is a sort of another lower level there. But consistently around this 41, 42 mark, it'll hit there. It'll then bounce going up to 48, 49, $50. And then retrace back again. It has been in this tight trading range now for a good year and a half, and it does supply some clients some really good ways. It's liquid. You can move in and out of this thing, and I think that is a really good opportunity. We've got a buy on BHP here at Shores, but overall, I think it's a good trading buy here at the moment.
On the subject of trading buy, what about Fortescue? It drops the most, it bounces the most. Do you expect a bounce over the next 12 months?
Yes, I think I'd be cautious on the bounce with Fortescue. China's its only customer. It really doesn't have much else but iron ore and a lower grade of iron ore. And do remember, we've got Simandou coming online within the next 2 to 3 years, which is going to put some more pressure on iron ore prices. So I'll be a little bit cautious on Fortescue. My concern about Fortescue is the constant management changes that have happened there. It's just been a round table of managers. And I don't know, that does say potentially something about Fortescue on the inside, not on the outside, but on the inside. And that lack of continuity, I think, is a really big issue for Fortescue going forward. I'd be cautious on there. I'd like to see the iron ore price stay around 100 and then start to tick up again. That might be your opportunity to look at Fortescue. Be careful on the dividend because it is going to get hit, and the iron ore price. I think and that they take a little bit more cost to produce a ton of iron ore as well. So just be cautious with Fortescue. If you have it, look, you're happy to hold it, but I wouldn't be putting fresh money in just at the moment.
Okay, let's go to Santos now.
Yeah, so Santos obviously part of that, overall rally that Aramco was going to take it over. $8 now looks a little bit far and distant away from where it is now at the moment. Santos obviously very leveraged to the oil price. The oil price has been okay, but a little bit weak, and it's been sort of moving around. I'm okay with Santos. I think you need to have that exposure. It's either Santos or Woodside. Both are good companies, but not fantastic companies. So I'll be a little bit cautious at Santos. Santos probably closer to 7 than 8. But yeah, it hasn't really done much, and it has really disappointed the market overall going forward. So it's a little bit tough one at the moment, Peter, for that one.
Okay. Pilbara is regarded as the best lithium company, but it's the most shorted, and the share price is pretty low. Is this a buy for the kids? Do you put this in their Christmas stocking for 2029 or
Yeah.
20?
Pick a number, not today though. Yeah. Oh, look, overall, look, there's obviously a reason why it's continued to be short. I mean, it's one access or one way to get access to lithium via Australian market because it is so liquid. So that's one of the reasons why it's been shorted so much. Yeah, overall, I actually looked at some EV sales data here in Australia. This is not globally, but here in Australia, it's still 1 out of 10 cars purchased an electronic vehicle here in Australia. So it's actually not too bad, the numbers that are still coming out of that electrical vehicle side of things. And obviously Tesla coming under a huge amount of pressure with more competition coming in. That still doesn't change the lithium outlook or the price of lithium, but certainly that price of lithium needs to stabilize again. I'd be a hold of PLS. We've got a lot of clients in this one at higher prices. I'd be a holder of it. I'd just wait to see that lithium price starting to tick up again, or start, the sort of the green shoots of lithium to then really move forward. So I'd be cautious on PLS at the moment. Still, that shorting is around about 22%, and that's the highest, as you well pointed out, the highest in the market.
Yeah. Let's go to an interesting one, Life 360. What do you think of this company? It's done very well lately.
Yeah, look, it has. I've actually we actually use through Live 360 for our kids who are teenagers now and moving around a lot more and keeping an eye on them. It was a lot easier when they were young because they were at home. Now they're out and about riding bikes, doing things, and sort of at the mall and things like that. It does give us that opportunity to have that kind of safety net that we think that we're keeping an eye on the children. Obviously, there's ways to skirt around that, but our kids obviously are okay with it. I think the app is fantastic. The next thing for them to do is start to monetize it. And I spoke to my wife about it the other day. I said, would you pay for it? She said, absolutely. There would be no, I would definitely pay for it because it's integrated into our day-to-day life where she checks where the kids are over the weekend or whatnot. So I really like the story. They've got that revenue driver, that pool of that revenue driver of ads, and plus some other things that they can do on the premium services. Any weakness, I'd be taking this one up. So I really like Live 360.
Yeah, I look, when I first interviewed the guy who brought this to life, it's an American company, as you know, but they're listed here. It was purely an American product. It's now becoming an Australian product. It's probably becoming a UK product. It's probably global, and you can just hear that worried attitude of a parent like you, and you can actually see why something like this is going to work. All right, let's go to the next one, mate, and that is AD8 or ordinate.
Yeah. So look, it's really come back a lot, hasn't it, on the charts? It's really sort of pulled back. I think it does provide some opportunity. These guys are a huge disruptor in the space of audio cabling, but the real driver is going to be that video side of things, which we haven't seen a lot of. And Ordinate is now sort of starting to talk to the market about that video side of things. So I think that's definitely a lever for that they can pull. I think Ordinate is a fantastic business, and on any weakness, like we're seeing, these good quality companies sort of hold up quite well, and this gives you this opportunity to get in. So yeah, really comfortable with Ordinate. It's a huge disruptor and has a fantastic pipeline of things that generate revenue.
Okay, let's go to the final one now. ResMed, you and I have liked it at low levels. It's crept up to higher levels. It seems to be defying the diet drug doubters out there.
Yeah.
What's your partner's view on ResMed right now?
Yeah, ResMed, we're still happy holding it with a buy on it. I think this one, it is looking really, really good. In fact, today, in a pretty horrible day, it's probably one of the only stocks that's holding up in its own, as you say. There was a really good interview with the CEO over the weekend on another business channel that it was fantastic, and he really sort of outlined that yes, this GLP-1 has taken a little bit off its profitability or its revenue, but the TAM, the total addressable market, is just huge. 1.5 billion people that need either sleep apnea, snoring, or other kinds of devices that ResMed puts in front, and they're only a 30% of the way through that total addressable market. There's massive upside, as well as the numbers that are coming through. This continuing to beat. So yeah, really comfortable with ResMed, even up at these levels.
Yeah, and I reckon if they were able to survey every married woman in the world, that number, addressable market, would probably go up by a factor of about 25, because so many men in particular snore. The occasional women do too, I believe.
Of course, but you don't never say that, do you?
No, you can't get away with that one. All right, Adam, thanks for joining us, mate. We'll talk to you in a couple of weeks' time.
Great to be here.
And that was Adam Dawes of Shaw and Partners. Coming up next is Mike Gable, but that is only going to be available for subscribers to the Switzer Report. Thanks for joining us. If you want to watch this show in full, you will have to be a subscriber. So go to switzerreport.com.au. Thanks for joining us.